Hello and welcome to our Centrelink Debts Community Worker Training webinar. I'm Thea Butler, the Community Engagement Manager here at Welfare Rights Centre, and I'm joined this afternoon by Senior Solicitor Julius Golab, who will be presenting the bulk of the training today. I would like to begin with an acknowledgement of country. At Welfare Rights Centre, we acknowledge the traditional owners of the land where our office is based, the Gadigal of the Eora Nation, and pay our respects to elders past and present, both here and on all the countries you are joining us from today. We extend our respect to all First Nations people attending this session. We acknowledge that sovereignty was never ceded, always was, always will be Aboriginal land. Housekeeping. We have sent the slides for today's webinar in a reminder email that you should have received this morning. Please use the chat to ask questions. We will be stopping several times to answer them. Please keep your questions broad. We cannot give legal advice today, and questions regarding very specific situations will not be answered. We'll be adding links about relevant information into the chat. Many links are already embedded in your slides. The chat can be busy. If this is distracting, there's no requirement for to use it or keep it open. Introducing Welfare Rights Centre. Welfare Rights Centre is a community legal centre specialising in social security and family assistance law. We provide information, referrals and legal representation to thousands of New South Wales residents every year who have problems with Centrelink. We also run regular community worker training sessions. Our peak organisations are Economic Justice Australia, Community Legal Centres New South Wales, Community Legal Centres Australia. We work directly with Economic Justice Australia to advocate for law reform by sharing our frontline casework experience with a national network of social security advocates to improve the social security system. Recently, we have contributed to a series of reports focused on the experience of women accessing Centrelink support in regional, rural, remote and very remote Australia. The third report will be launched at Parliament House later this month. Disclaimer. Just one more reminder. Today's presentation is general information only, and it's not legal advice. We cannot answer any questions about specific circumstances, so please keep your questions broad in the chat. I will now hand over to Julius.
How broad our social security system is. It's a huge, complicated system that delivers an enormous number of payments. Like, for example, there's 2.6 million people that receive the age pension. It's a very large system. Now, unfortunately, within such a large and incredibly complicated system, sometimes mistakes do happen, debts can be raised for all sorts of reasons, and because it's someone's might be their only source of income, it can feel really personal and distressing when a debt is raised. All right, so some of the things that we'll cover today, starting off with an update on Centrelink debts. It's a bit of a time of change recently. There's been a lot of things that have been going on, as well as some background on, first of all, what is a debt? When does one come about? As well, the common types of debts that we see. That's just a couple of examples. It's many, many more reasons people can have Centrelink debts, as well as some information on debt recovery and the appeals and review process too. All right, but some of the recent developments. First of all, there's the second robo-debt settlement scheme, which is an additional 475 million. Registrations for this second settlement did end on the 6th of March. Hopefully, people were able to register before then. But our peak body, Economic Justice Australia, has been trying to do some advocacy pushing for that to be extended, the registration cutoff date for that. As well, there was the recent income apportionment case that went to the federal court in July of last year. Leave has been granted for that one to go to the High Court now, and there'll be a hearing in the High Court in April. So next month, very, very soon. It'd be interesting to see what comes from that. As well, because of this whole income apportionment issue, Centrelink has set up a resolution scheme that I'll go into in just a moment. And on top of that, there's also been some legislative changes. So income apportionment debts have now been retrospectively validated, made legal. As well, there's been changes to debt waiver in special circumstances that hopefully better respond to particular situations of family and domestic violence. And lastly, small debts under $250 should be automatically waived now with some of the new rules. That's not if someone's had a larger debt and repaid most of it and they have $250 left. It's if a new debt's being raised and it's 250 or less. It should be automatically waived. All right, but the income apportionment resolution scheme. So I might just touch on that briefly. What that is it's a scheme set up to compensate people who have had debts affected by income apportionment. If you've had a number of clients over the last couple of years that have had Centrelink debts, it's possible some of them might have had their debts that have been paused completely for some time. I know I've had clients who have had debts that were paused for at least 2 years under the income apportionment issue. These debts are now being recovered. People should have received a letter saying that they needed to start repaying these debts again. And with this compensation scheme that's being set up, so applications, for the scheme have opened from the 30th of January of this year, but people have until the 29th of January 2027, so until the 29th of Jan next year to register for the scheme. So it's quite some time to register for it. There is a series of eligibility criteria people need to meet to be eligible for a payment under the scheme. There are some caveats with it though. If you agree to an offer of compensation under the income apportionment scheme, it means that you release the Commonwealth, so Centrelink, from future legal actions, which could mean that you rule yourself out of a potential class action. Unfortunately, we don't know much more on the specifics of that at the moment. It's still pretty early days. But what people can still do is they can still go through the merits review process, which is challenging a debt, for example, under special circumstances and trying to get it waived. So here's when people might be eligible for compensation under the scheme. They need to have had a debt because of employment income during the period September 2003 up to December 2020. So it's a 17-year time period. It's quite large as well, but it needs to have been affected or likely affected by income apportionment, which was a method that Centrelink were using to calculate some of these debts, where they're apportioning income over more than one fortnight instead of just the one in which it was earned. There are some other requirements though. You need to have not been prosecuted or found guilty of fraud for the debt. The debt mustn't have been waived in full or reduced to zero before the 30th of Jan 2020. But if you do have more than one eligible debt, you can apply for compensation for each eligible debt under the scheme. As well, the amounts people have paid towards the debt, it looks like they won't affect the amount of compensation they can receive. Really, it depends on what the total value of the debt was at that 30th of January date. So, for example, if you had a debt of more than $5,000, you might be eligible for $600 in compensation. Does depend on the individual debt though. Sometimes people may have multiple debts that they might conflate as just being one large amount, but it could be, let's say, like five $200 debts that equal 1,000. But for each one of those, they could possibly apply under the scheme. All right. Now, it can be tricky and messy trying to work out whether someone has a Centrelink debt. The social security system is incredibly complicated. There are many, many different moving parts with it. And so it can be difficult trying to work out what's going on. People might not understand, the reason a debt's come about. As well, there can be risks with Centrelink debts as well. sometimes they can increase. And you might have to be persistent in trying to find out more about what the issue is and how this debt's come about. But to kick it off with the nitty-gritty about debts, first of all, what is a debt? Under the Social Security Act, if a Social Security payment is made, so for example, if someone receives a job seeker payment, and the person who's obtained the benefit of that payment wasn't entitled to it for any reason, then that payment is a debt due to the Commonwealth. What that means is if someone's been overpaid a Centrelink payment, then a debt's raised. If they haven't been entitled to the payment itself or the amount of payment they've received for any reason, then they could have a debt. There's also no time limit on Centrelink raising a debt. I've seen debts go back, 10, 15 years, for example, sometimes even longer. It's something that we've tried to push for through Economic Justice Australia is the reintroduction of a time limit on debt recovery. There used to be one that was gotten rid of. Excuse me. But it's been something we've been trying to do advocacy for is reintroducing a time limit. Now, when someone does have a Centrelink debt, when a debt's raised, they should normally receive one of these letters. This is a debt notice, or we might call it an account payable letter. And what this letter shows is the amount of a debt that's been raised. So we can see here the money you owe is $64,000. It shows what the person was paid and what Centrelink say they were actually entitled to receive. As well, the time period the debt's for. So for example, here we've got June 2004 up until August 2019. So this is a 15-year debt period. As well, the payment that the debt's for, the disability support pension. And lastly, the reason for the debt. Centrelink's decided that they were a member of a couple, so that someone was in a relationship. What looks like it's happened here is over these 15 years from 2004 to 2009, this person's been receiving the single rate of the disability support pension. Centrelink's decided that they were actually in a relationship during that 15-year period and then have raised a debt for the difference between the single and the coupled rate of the disability support pension. These letters are really, really helpful for us as well because they help try and show, some of this basic information about the debt. For example, the payment the debt's for, the reason for the debt, as well as the time period that the debt's for. It's really helpful in trying to know, what was going on in that person's life, particularly during that time period that might have led to the debt. Now, I've got some common signs where someone might have a Centrelink debt. Sometimes people might not know that there's a debt and there might be one sitting in the background. The first and most obvious sign someone has a debt is, of course, they've received the debt notice from Centrelink, that letter I showed in the last slide with the amount of the debt and the reasons for the debt. Other ways people might have a debt but not realize it could include if their payment's being reduced and they're not sure why. The standard amount that's automatically taken from a person's payment to repay a debt is 15% of their payment. So for example, if you're on job seeker, 15% of that, it's a lot of money that's automatically taken. As well, some other signs that someone might have a debt, they might not be receiving their tax returns. They might be lodging them every year and they never get them back and they're not sure why. Or they might be receiving family tax benefit and they never get their top-ups or supplements at the end of every financial year. Or it could even be if they've stopped receiving their family tax benefit full stop. There could be a debt lurking in the background. We've got an image here as well where a client's had $416 taken from their payment to repay a debt. It's incredibly large amount. Now, there are ways that people can try and find out more information and confirm whether a client does have a debt. Here's a couple of practical tips we've put together. First one, we'd recommend people check the rate of payment to see if the person's getting the right amount. Comparing the amount they receive and what their letters from Centrelink say against the rates of payments that you can see online. Centrelink has a payment guide that they publish every couple of months that has the latest up-to-date rates of payments that you can easily find just by searching for Centrelink payment guide. It's something we use all the time when we need to double check what the correct rate is. As well, people can call Centrelink and ask, why their payment's being reduced. There's also documents you can request or you can look at that can help show if there's a debt. There's a couple of telltale signs people can look for. For example, on their income statements or payment summaries from Centrelink, it might show an amount being deducted for a debt. As well, if you go online onto your Centrelink online account through MyGov and check people's letters, there might be a debt notice sitting in there, or the money you owe section on MyGov can show the amounts that Centrelink have raised as a debt that they say that someone owes. There's also documents you can generate on MyGov as well that are really helpful in trying to find out more. For example, the statement of debt or statement of account, excuse me, shows a 5-year period with debts, and it shows the amount someone's repaid towards a debt during that time period, as well as some basic details about any debts that have been raised during that period as well. Now, I've got a couple of examples of some of these documents I've mentioned as well. So first of all, the income statement. If we have a look here, it's got the date it was generated for, income statement for this person, some of their basic details, the regular payments they receive. So they're an age pensioner. They also get their supplementary payments. As well, we've got deductions from their payment. And over here on the right, you can see there's a debt repayment of $15 that's coming out every fortnight. Now, another one is that statement of account that I mentioned. This again is another document that you can generate on MyGov. This is really helpful in trying to find out more about debts, at least just some basic information. So we can see here it's got the time period this has been generated for, January 22 to November 2025, and shows a list of deductions that have been made from a payment, so repayments someone's made towards a debt, as well as a new debt that's come about, and a couple of new debts that have actually come about for this person. And then it says the balance, which is the total amount of their debts that have been raised to. It's also got the payment the debt's for. So for example, there's family tax benefit and job seeker debts here, as well as it normally has the debt number, which is the specific ID number Centrelink gives to a person's debt. Now, if you follow the steps on Centrelink's website, you can request some of these documents. It's really, really easy to do if you or your client has the level of digital literacy you need to be able to access these documents. I recognize that for everyone, it's not going to be simple. But if they are able to log in through their Centrelink online account and go into this documents section, they can request a document. And some of the documents that people can request can include application forms that they've filled in for a payment, their payment details and statements, any deduction statements, as well as those last two I listed, which were the income and assets statements, as well as the statement of debt. If you follow the link there on the bottom of the slide, it'll take you to Centrelink's requesting a document page of their website. All right. Now, once you know there is a debt, what should you do? The first thing we recommend people do is contact Centrelink's debt recovery line and try and enter into a repayment plan. Entering into a repayment plan doesn't mean that you agree with the debt and that you're not going to ever challenge it. You can still appeal a debt if you've been on a repayment plan and if you've been making payments towards it. What it does do is it generally stops Centrelink from adding interest to the debt, and it can stop them from trying to recover the debt through other means, for example, garnishing your wages. The debt recovery line, if you don't call them to enter into a repayment plan, they will normally apply that standard 15% deduction from a person's payment. So it's normally the first thing we recommend clients do once they've found out they have a debt is get in touch with the debt recovery line and ask for it to be um, lowered. Something that can be really helpful as well is when clients speak to a financial counselor to try and come up with a budget around what the minimum amount of debt repayments they can afford is. And then it could be an option to provide that to Centrelink as well, perhaps uploading it through MyGov, then giving the debt recovery line a call and saying, look, I've uploaded budget. This is all I can afford to pay towards a debt. I've seen cases where, through doing that, people have been able to get on a $10 per fortnight repayment plan for 6 months or so because their budget's shown that they couldn't afford anything more. All right, we might stop for some brief questions before moving on to some of the common reasons for debts.
Yes, okay. We do have a number of questions and a couple of statements. I have provided in the chat a link to the Economic Justice Australia fact sheet on the robo debt settlement because there was a question there. So I can put that link back in the chat again. There was a question just regarding that the debts under $250 regarding those debts being waived. And the question was that so they're not written off. They won't be or will they be resurrected next time another debt of the same type is raised?
No, no. If a debt's raised, if it's under $250, it should be automatically waived and permanently waived rather than written off. I guess the issue that could come up is if someone challenged it, for example, or if a debt increased in an appeal. But if it's a small debt, let's say someone misreported their income for one fortnight and has a small debt under $250, then no, that should be waived.
And just to reiterate that when we were talking about the income apportionment scheme, I have added links to Services Australia information regarding the scheme, but we did say that clients may receive a letter about the compensation scheme if they're eligible, and those letters would have started to have been sent out. I think it was that in late January?
Late January, yeah.
Yes.
Yeah. So I'd recommend people have a look to see if they've received one of those income apportionment resolution scheme letters.
Yeah. But if you do believe you have a debt, you can apply via the Services Australia website. Um, there is a statement here, but that is speaking to the robo debt scheme debts and saying that they are seeing income apportionment debts that may be listed as part of sorry, the robo debt scheme debts are showing up in the income apportionment application process. So there may be some
Mm, some crossover.
crossover.
Yeah. And I think it's a problem in that it's so messy and complicated. This is the second of these issues that have come up with income debt calculation as well. Um, I don't think there's much more I can add, though, other than just agreeing that it's messy and complicated, and I think is going to continue to be a bit messy and complicated with some of these debts.
All right. Um, Susan Parker from Action for People with Disability has mentioned that she believed there was a requirement for all organisations to bring up debts statute of limitations. Why doesn't the government have to follow that rule? Not sure that we can answer
There,
that.
there used to be a limitation period for Centrelink debts being raised. That was removed some time ago, unfortunately, and now, yeah, as a result, there's no time limit on Centrelink debts being raised. It is something important that I think is worth advocacy on that Economic Justice Australia have been trying to push for. And if it's something you feel very strongly about, it might be worth as well, writing to your member of parliament as well, expressing your frustration and concern, but there's no time limit on debt recovery for Centrelink debts.
Okay. There's is the standard repayment rate 15% of Centrelink payments and or 10% of gross earnings, such that working recipients can have variable deductions?
I'd have to have a bit more of a look into it, I think. Um, I know if it's the Centrelink payment, the automatic deduction's 15%. If someone's working, I'm not sure off the top of my head
Okay.
whether it would be 15% including their employment income.
Oh, yeah. And so that was then reiterated because on one of the samples that we showed, the deduction was greater in the example. So,
Mm,
and the suggestion could be clearly creating hardship.
absolutely, absolutely. And as well, it may have been in that example, for example, that the person might have agreed to that amount of repayment and maybe not realized how significant that was. We might have one more there and then we'll keep going.
Okay. Um, if you appeal a debt but you have paid some amount, do they repay the amount plus interest?
They don't add interest on top, unfortunately. But whether or not you get the amount you've paid back depends on whether or not all of the debt's waived in an appeal. So for example, I've seen situations where, someone might have had a debt and only some of it's been waived instead of the full amount. Or I've seen tribunal decisions where the amount left owing of a debt was waived. So any amounts the person's repaid towards it thus far um, have been accepted, and then whatever's left owing, the tribunals decided to waive in special circumstances. Um, the short answer is it depends on how the debt's waived and how much of it's waived.
Okay. So we've got some more questions. Some of them will be answered as we go along, I can tell. And I'll come back to those ones that haven't been responded to in the next session of questions.
All right, fantastic. And yeah, just a heads up, everyone, we do have a couple of spots to stop for questions. So we've tried to spread them out throughout today's presentation. All right, but now we'll launch into some of the common reasons that someone might have a Centrelink debt. This is by no means an exhaustive list. Um, any reason someone might not be eligible for a payment or any reason the payment might be reduced or cancelled could be a reason to have a Centrelink debt. There are so many. So we just got a couple of broad examples, some that we see pretty often that we thought would be helpful here. Now, one of the most common is debts due to income and assets. Um, People need to report their income and assets to Centrelink. They do have an obligation to report them and any changes to them within 14 days. Generally, with with Centrelink payments, there are income and assets tests. There's different tests for different payments. For example, the income test for job seeker may be different to the income test for the disability pension. There's also differences in the assets tests between the two. Assets tests are the limit of the value of a person's assets they can have and be eligible for a Centrelink payment. So, for example, with job seeker payment, once you reach the limit for the assets test, job seeker's cancelled. Whereas for the disability support pension or age pension, it's actually got 2 points. First of all, there's a taper limit. Once you reach that, your payment starts to taper down and reduce. And then it's got a cutoff limit where if your assets are over that limit, it's cancelled completely. Some assets aren't accessible by Centrelink. For example, your superannuation, if you're under age pension age, doesn't count towards your assets test unless you take the money out of your super. So, for example, if you apply for an early release and it's in your bank account, then it can be assessed towards your assets test because it's accessible to you now. As well, your primary residence, if you're living in it, isn't assessed towards the assets test. There are some rules, though, where if someone leaves their primary residence for a period of time, then it can start to be assessed towards the assets test. Often debts will come about because of assets if the asset hasn't been declared to Centrelink. For example, if someone has an investment property that they didn't tell Centrelink about when they applied for job seeker payment, Centrelink becomes aware of the investment property some years down the track, they'd raise a debt saying that the person hadn't declared that asset and its value might have put them over the assets limit. It depends on the value of the asset too. Now, Income, we all know needs to be reported to Centrelink. It's always the gross employment income that's reported, so your income before tax rather than after tax. I know that's something that tripped people up for a long time. Hopefully, with the introduction of the single touch payroll, new income debts are a bit less frequent. Anecdotally, I haven't seen too many new income debts. It seems that some of that pre-filling information has stopped some of those. Um, with income, it works. Um, there's an amount that you can earn before your payment starts to reduce. Then once you've earned over that, it starts to taper down as well. For example, if you earn over X amount, your payment typically reduces in 50 cents for the dollar or so. Um, the exact income and assets tests, they can be really easily found on Centrelink's website. It's as simple as searching for, for example, job seeker income test. Income debts, they're also very, very common as well. We see them all the time. Now, some of the reasons people might have a debt due to their income could include if they haven't declared their income to Centrelink, or if their income's increased and they've only reported, for example, previous amounts they earned, where someone might be in a relationship and they might not be declaring their partner's income. They may end up with a debt due to income, or if they're not accurately reporting the partner's income. Um, Other examples could include, roboted income apportionment issues. Some that are a bit more less frequent, but we do see every now and then, might be cases where someone's receiving, for example, periodic compensation. If they've had a workplace injury, they might be receiving periodic payments from a compensation insurer. Um, Typically, those payments actually reduce a person's Centrelink payment dollar for dollar. There are some differences, though, depending on how the payment's categorized. Um, Other debts we've seen could include if someone's been receiving income protection payments from their super, for example, and if they haven't reported them to Centrelink, then they may end up with a debt. And so we've just got a couple of examples of some debts here. So first of all, we have Diane. She's an age pensioner. She's been receiving the age pension since 2020. Sorry, 2010. In 2020, Diane's mum passed away and she inherited her mum's home in regional New South Wales. She didn't realize that she needed to tell Centrelink about the inheritance. Diane actually assumed that the executor of her mum's estate would be the one to tell Centrelink. In 2025, so last year, Diane started the process to enter into residential aged care. While she was filling in the forms, she included information about her assets, which included her mum's home. Um, Centrelink hadn't been aware that Diane owned her mum's home now after her mum passed, and became aware of this when she filled in those forms and provided them. Because of that, Centrelink raised a debt for some of Diane's age pension going back to 2020 when she inherited the home. We've also got an example of an income debt here as well. So Marta was married to her husband for 10 years. He'd been working in sales while she was staying at home looking after their three kids. Marta was a migrant with very limited English. Unfortunately, it was a very violent and relationship with lots of financial abuse as well. He handled all of their finances, was her nominee for Centrelink, controlled her Centrelink account, reporting, never told her directly anything about his finances. Unfortunately, when she eventually left the relationship and was able to get some help from a refuge to access a Centrelink payment, she found out that she'd had a Centrelink debt that had been raised because his income hadn't been reported correctly. He'd been providing incorrect amounts of, incorrect reporting to Centrelink for how much he was earning over a number of years, which had led to a debt. I'll go a bit later on towards the presentation today into the appeals process as well, because some aspects of that are very relevant for this example in particular. Now, another way debts might come about is if Centrelink decides someone's a member of a couple. So When someone's considered to be a member of a couple in a de facto or marriage-like relationship, their rate of payment is affected, and also the payment they can get can be affected. For example, there's a difference between parenting payment if you're partnered and parenting payment if you're single. When Centrelink decide whether or not someone is a member of a couple, whether they're in a relationship, under the Social Security Act, there's 5 factors that they take into account. These include the financial aspects of a relationship, so whether the couple are pooling financial resources and working together as couples normally do or expected to do, excuse me, as well as the nature of the household. So how chores are split up in the house, whether couples cook together, whether they eat meals together, whether they sleep in the same bedroom, the social aspects, whether they hold themselves out socially as being a couple. If they have the same group of friends and if their friends know they're a couple, or if their family members know they're a couple or think they're a couple, if they go to weddings together, family holidays together, all those sorts of things. As well, if there's any sexual relationship between the people and the nature of their commitment to each other. So whether there's any ongoing commitment, whether they intend to be a couple. Now, this is a subjective test as well, so it does depend on, the individual circumstances and their intent. It's very relevant. There is also a discretion under Section 24 of the Social Security Act where someone can be treated single if there's special reasons to do so. It is discretionary though, so it is ultimately up to the decision maker to decide whether or not to treat someone as single. Centrelink can also accept that people can be can have previously been in a relationship but have separated and continue to live under the same roof. It's called separated under one roof. Sometimes debts might come about if, people have been living separated under one roof for a long period of time and perhaps Centrelink don't know that they were previously a couple. They might decide that they think they are actually in a relationship when the couple might be separated. Typically, though, you'll need to try and explain why people have continued to live together and provide evidence about their breakdown of the relationship and whether there's any plans, to not resume the relationship. Where it can get complicated is if there's financial assets that are really closely intertwined. For example, if the family home is joint owned by both the people. It can be very messy. As well, if there's family and domestic violence that's present, sometimes an assessment from a Centrelink social worker might help in trying to decide whether or not these people are a member of a couple or if they're separated. But there is a risk with people being separated under one roof. It is reviewable. So Centrelink might come back at some point in time in the future and say, you've been living separated under one roof, pooling your resources for the last 20 years. We actually think you're a member of a couple now. I've seen cases where it's happened with age pensioners, for example, where, they'd lived together, separated for such a long time under the same roof, had slept in separate bedrooms, but their financial resources were still quite heavily intertwined, and Centrelink had now formed the view that they thought they were still in a relationship. As well, like I briefly mentioned, family and domestic violence is very relevant to when Centrelink decide whether or not someone is a member of a couple. I think over the last couple of years, there's been some really good progress on better recognition of family and domestic violence within the social security sphere, both at the Centrelink level and also in some tribunal decisions as well. It can include all different manners of how family and domestic violence can occur. It can include coercive control, financial abuse, physical abuse, social isolation, all sorts of things. It's also broader than just being within an intimate relationship between two partners. It can also involve, relationships with relatives, guardians, kinship groups, and other family-like relationships. Also within, flatmates, for example. This isn't strictly just necessary to relevant to member of a couple decisions. It can also be relevant to, someone's broader special circumstances if they're trying to get a debt waived. Now, here's just some brief examples of how it might interact, how the presence of domestic violence might interact with those factors. Centrelink look at when deciding whether or not someone is in a relationship. For example, with the financial aspects and Marta's income debt example that we touched on earlier, the presence of that financial abuse, and that economic sort of control might help go towards showing that perhaps they're potentially not a member of a couple and shouldn't be considered to be in a relationship. And so there's just a couple of, examples of how it might interact here. Now, when Centrelink does raise a debt saying that someone is in a relationship, these debts can be quite large. So, for example, that debt letter I showed right at the start, that was a 15-year time period. Centrelink went back and said that this client was actually in a relationship for. Where it tends to happen is where two people keep living in the same house, even though they're separated for some time. We've also seen situations where it happens, particularly where there is family and domestic violence, where the perpetrator of the domestic violence has forced the victim survivor to not tell Centrelink that they're in a relationship, for example, and to claim the single rate of payment rather than the coupled rate. Often, if Centrelink does decide that someone is in a relationship, they tend to be pretty large debts, particularly if the alleged partner was working for some or all of the debt period, because their income will be taken into account when assessing the amount of debt that's raised. As well, if Centrelink decides someone is in a relationship, sometimes they may actually suspend or cancel the person's payment until they provide information to prove whether or not they're in a relationship. So, for example, Centrelink might suspend someone's payment and say you need to provide a Mod P form, which is a partner details form. And if you don't provide that, we're going to cancel the payment. The decision itself to treat someone as a member of a couple, that can be reviewed, or you can ask for a formal review by what they call an authorized review officer of that. It is separate to appealing the debt. Both are reviewable decisions. Typically with a debt like this, though, the way you'd go about it is by trying to challenge and prove that the person wasn't in a relationship, and that'd go towards those 5 factors that we mentioned earlier, the financial, accommodation, social, sexual, and commitment factors. All right, well, you might stop for a couple more questions again, Thea.
Okay, we have a lot of questions, so I'm going to apologize in advance just in case we can't get through all of these. And just going back to where we left off, I think that we're going to be talking about this later, under what circumstances can be a debt be written off or waived. So we'll just leave that one. There was a question regarding how does Centrelink get a garnishee notice on a client's protected Centrelink income? So I wasn't sure if we can answer that, or if I understood that correctly.
No, because I'm not sure what protected Centrelink income is there. It's not something I've heard of before.
All right, well, I'll look that up and see if I can get some more information. The next one is, what about a historical debt that may be a robo debt but unsure? How do you clarify?
It is something I'll touch on a bit later as well, but what someone could do is do a freedom of information request to try and get more information about the debt. There's a letter I show all the way towards the end, and it's called an ADEX debt schedule. And what it shows is it's a list of payments a person's received each fortnight throughout the period of time Centrelink Saver Debt is for, and hopefully it should have the amount of income they've reported during each fortnight for that period as well. And if it was a robo-debt, it used to have this column that showed the person's apportioned income, and it would be the same amount every single fortnight that's been apportioned throughout the course of that financial year. Um, that could be an option to try and clarify whether it is a robo-debt by doing an FOI request.
Thanks. And I think there was also a suggestion from a very knowledgeable member of the community here today who said that most people should have received their robo-debt letters and information, and that the only, and possibly the way that they mightn't have is because they weren't up to their address and contact information was not up to date.
Yeah, that's exactly right. I think if it were a robo-debt, um, and their information was up to date, they should have been aware by now. So it's entirely possible that it might not be.
All right. So there's a bit of a question about how can two clients have different reporting requirements? Um, with a client on a single parent payment must report income fortnightly, although currently does not work, while another client has no reporting requirements at all. And what impact can this have in terms of potential debts?
Hmm. Yeah, for example, if a client who's not reporting, it could depend on the payment they're on. For example, if they're on the age pension and they're not working, they might not be on reporting. Or if they're on the DSP, the disability support pension, and haven't worked, they might not be on fortnightly reporting. But if they did start working and they didn't tell Centrelink that they started working, then each fortnight where they're earning money and they're not reporting it as a potential fortnight they might be getting overpaid.
And therefore incurring a possible debt. Yep.
Absolutely.
Okay. Um, I think there's a few questions just around how many hours a person can spend working on a business and not earning an income, but still be eligible for job seeker payments. But I think we can answer that just by whether or not people can still meet their mutual obligations. Uh, so would you like to speak to that, Julius?
Look, I think that one can be a bit complicated, particularly where it starts to um, diverge into people who are sole traders. It gets very messy income reporting, um, and whether someone's considered unemployed in those circumstances.
Okay, tricky. Um, I don't know that we can respond to this, but if a debt is technically a Centrelink debt but goes through a different scheme or organization, for example, SRSS payments, do you have experience about how they are generally handled? Can they still be treated as Centrelink debts?
Ooh, I haven't seen an SRSS debt in years. Um, I would have to go look at I think it's the SRSS operational manual or operational blueprint. But from what I can recall anecdotally, SRSS debts are very difficult to get challenged or waived, and I think it's quite rare that they are. Um, yeah, off the top of my head, I can't remember what the review process is for an SRSS debt. I think it may be quite different to Centrelink debts because SRSS payments sort of sit outside the norm of what a Centrelink payment is, and is more like what they might call an act of grace payment. It's sort of very discretionary.
All right. I think this question sort of speaks to advocacy, but what is being done to address the long-running systemic issue that arises due to customers not being able to, not being, sorry, put onto fortnightly income reporting? This disproportionately affects parents, especially mothers, who wrongly but understandably believe that their annualized family income estimations, updates, reconciliations for FTB purposes also satisfy obligations for income support entitlements. Such debts tend to be large.
Mm, yeah, I think correct me if I'm wrong. I feel like EJA has done some advocacy trying to around this in the past. I'm not sure where anything's up to at the moment, though. But I agree. It's a huge. I agree. It's a huge problem, because someone might be providing their estimates for family tax benefit, every year, perhaps they update their estimates if the income changes. But if they haven't been put on fortnightly reporting for parenting payment, then they are going to end up with a debt for the parenting payment side of things as well. Um, and this is, two separate sort of systems within Services Australia that don't neatly sort of interact and talk to each other. Um, so I think it's a quite a flaw that people can wind up with these debts and that they've been ongoing for some time.
Yeah. Yes.
Might do one more if that's right, fair, and then we'll stop briefly for break.
Okay. If a client receives Centrelink payments in error, not and now has a debt, can this be disputed? Coming up.
That's coming up, that one. There are administrative error waiver rules that we'll touch on a little bit later after a couple more examples of common reasons for debts.
All right. I'm
All
sorry,
right.
everyone. We do have a lot more, but we'll try to get through as much as possible. And if we can, we'll use up time at the end if we have any.
Yeah, thank you. There's been some fantastic questions, everyone. It's been really good. All right, so what we'll do now is we'll stop for a brief 5 minute break. It's 2:54 now. It's probably going to be 2:55 in a sec, so we'll reconvene at 3 o'clock and then go through towards the second half. Um, there is still quite a bit of information to go through, so there might be some parts that I sort of speed up and jump through to focus on some of the more important aspects. All right, perfect. But we'll come back at 3 o'clock. Thank you, everyone. All right, it's 3 o'clock now, so I'll kick back off. Excuse me. And I might say as well, with that question we had before on the advocacy side of things, something that our centre does a lot is we use our clients' case studies and situations we've come across with clients, and we'll often feed those up to Economic Justice Australia, where we think there is a law reform or policy issue that we want to get on their radar. Okay, now another common reason that a Centrelink debt can come about, includes where there's the care of children involved. Um, Whether or not someone has children in their care, that can also determine a number of things too, like the payment that they're eligible to receive. For example, if it's parenting payment or job seeker or family tax benefit, it can also affect, the conditions of their payment. For example, they might not have to look for work for parenting payment depending on how old their um, children are. Um, and it also affects the rate of payment someone can get as well. There may be a different rate or a different income test that could apply depending on not whether there's children in someone's care. It can even affect someone's mutual obligations for job seeker. For example, there's a specific exemption from needing to look for work if someone has a large family, I believe, if it's 5 or more children. Um, so whether or not there's kids in someone's care, it can affect a lot of things that interact with someone's Centrelink payment, but that also can mean there's lots of potential situations where debts can come about. Um, like that sort of question just before alluded to, it's also a complicated system with, parenting payment and family tax benefit. They're two separate payments. One a social security payment, the other a family assistance payment, that do have some interaction, but also some separate criteria. For example, parenting payment, can only be paid to one parent, typically the principal carer of the children. Um, and then if it's difficult to choose which one is the principal carer, it's generally based on who's going to be disadvantaged most by not receiving it. Whereas family benefit, it's got quite a different criteria for when a person can receive some of the payment for kids being in their care. For example, need to be in the person's care at least 35% of the time. Um, can also be paid to both parents if they're separated and share care of the children, though it's different proportions of the payment that are paid as well. If it's a couple that do live together, though, it's typically only paid to one member of the couple. Now, family tax benefit is quite different to other Centrelink payments as well, in that it's based on what a person's adjusted taxable income is, instead of their fortnightly income that they report. Instead, it's based on your taxable income at the end of financial year. It is adjusted taxable income, though, so there are some slight differences between it. Family tax benefit, it can be paid fortnightly, but it can also be paid annually at the end of financial year in a lump sum. As well, there are some differences. You can claim it for a past period of time. For example, you could claim it for the previous financial year if you didn't receive it and there were children in your care and you would have been eligible for FTB. The income side of things is quite different, though, because while it's also based on the adjusted taxable income, you do need to provide estimates for what your income's going to be. And this is different to the fortnightly reporting where, you'll get a task or a notification on your app saying you need to report every fortnight for parenting payment. That's not the case for FTB. You need to provide estimates. And then if your income's going to change, let's say it increases or decreases, you need to provide updated estimates throughout the year. Centrelink also require people to lodge their tax returns at the end of financial year to assess whether they've been correctly paid family tax benefit, because they do what's called a reconciliation, where they reconcile what a person's estimates were throughout the year against what their actual adjusted taxable income was. If you've overestimated your income and your actual income is lower than your estimates, you'll typically be paid a top up. But if you've underestimated your income and your income's higher, you'll typically have a debt that's raised. Now, like that question mentioned as well, again, it's a different reporting system. Um, Parenting payment, you report your income every fortnight to Centrelink, and that's taken into account and reduces your amount of parenting payment. Whereas family tax benefit, it's your estimates that you provide. And then if these estimates aren't updated throughout the year, you could end up with a debt for that reason. Unfortunately, these are two systems that don't neatly interact and talk with each other. So someone might be receiving family tax benefit providing their estimates, and they don't realize that these estimates they're providing for their FTB doesn't update their income information for parenting payment. And so each fortnight that they're not reporting that information, that income separately for parenting payment is a potential fortnight that's adding on to a debt. Some of the common issues that we see as well, where families and children can give rise to Centrelink debts, can include with care of kids in particular, if there's been a major change in the care of the children. So, for example, this could be if the care arrangements between the parents change and Centrelink aren't updated, or if, for example, a child goes to stay with a parent over the school holidays and that parent then refuses to return the child. Or it could be a relative that refuses to return the child. I've seen it happen where it's grandparents that have refused to return a child. As well, if fax, for example, removes a child from someone's care, the obligation's still on that person who had care of the child to tell Centrelink that the child's out of their care after such a traumatic event. And if they don't, then there's a risk that they may incur a Centrelink debt because if they continue to receive their parenting payment or their family tax benefit. Um, Other situations that might give rise to a debt could include for FTB, a family tax benefit, if at the reconciliation at end of financial year, if their estimated income was lower than what their actual adjusted taxable income was, they'll typically get a reconciliation debt. Reconciliation debts, they are extremely common. They happen all the time. Um, Another situation that could lead to a debt is what's called a non-lodger debt. So, like I touched on earlier, for family tax benefit, you need to lodge a tax return at the end of every financial year, and you normally have 12 months after the end of financial year to lodge your tax return. If you don't lodge your tax return, Centrelink can raise what they call a non-lodger debt, which is they raise all of the family tax benefits someone's received throughout the financial year as a debt until they lodge their tax return, so that way Centrelink can reconcile their income. This can be a particular problem if there's been a separation of a relationship and it's the ex-partner who needs to lodge their tax return. They can't really, or the person who received the family tax benefit can't really force their ex-partner to do that, to lodge the tax return. There are some provisions around separation and ex-partners and requirement to lodge a tax return. For example, if the separation's after the relevant financial year and Centrelink raise a non-lodger debt, they may be able to write off the debt until the ex-partner lodges their tax return, and then at that point they can do the reconciliation and properly assess whether or not there is an income or a family tax benefit debt. And so we've got some more examples of some debt notices here. The one on the left, that's a debt where children have left someone's care. So for example, we can say it's a family tax benefit debt of $2,487, I believe it is, or 67. I can't quite see which one that is. For November 2017 up to January 2018. The one on the right, however, this one is a non-lodge debt. So we can see here it's for the 21 to 22 financial year. The payment that it's for is for family tax benefit. As well, it says at the top, as your family income for the 21 to 22 financial year has not been confirmed, we cannot check if you were paid the correct amount. This means you have a debt for the full amount you were paid. And then in the details of the debt underneath, you can see what you were paid was 17,000. Centrelink say you should have received $0. So every cent of that has been raised as a debt because they haven't done the tax return. Normally, non-lodger debts like this are resolved once someone does lodge their tax return. What Centrelink then does is they complete that reconciliation process. They'll compare the information from their tax return and see whether or not they've underestimated or overestimated, or if they're spot on with their estimates for their income for the financial year. Now, we have some more examples here as well of where debts have come about, where there's been children or family tax benefit involved. So, for example, Satar here had been in a violent relationship. She left and was able to get out of there and took her three kids with her. Her ex-husband was still involved in some ways and, was still in contact with the kids, and he kept demanding additional days with them and kept threatening to stop paying child support unless he had more time with the kids, and so continued to perpetuate that abuse after the relationship had ended and she'd managed to get away. Um, he did end up having the kids more and more frequently in his care. Unfortunately, she hadn't updated Centrelink to the changes. It came as quite as a shock some years later as well when she found out that a $17,000 debt had been raised for family tax benefit because of those several years where the care of the children, the care arrangements had changed and Centrelink hadn't been updated. Um, we have another example here as well, Tara. So Tara had been in again, unfortunately, another violent relationship. She'd been hospitalized and her children went to stay with her mother-in-law after that. Unfortunately, her mother-in-law refused to return the children to her care for a number of weeks. During this time, the mother-in-law claimed family tax benefit. Centrelink raised a debt of around 2.5 grand because Tara's mother had claimed it for a couple of weeks in the past. And so the period of time that overlapped between Tara getting the family tax benefit and her mother-in-law claiming the family tax benefit was raised as a debt against Tara. Now, we also have an example here speaking to that difference in the reporting requirements for parenting payment and family tax benefit. So Darren here, he began receiving carer payment and family tax benefit after the birth of his first child. His child had quite severe health conditions and disabilities, and so he was found to be eligible for carer payment pretty early on. He had to stop working to provide full-time care for the child while his partner continued working. When he claimed family tax benefit and parenting payment partnered, he was told he needed to provide estimates for his and his partner's income for the financial year, and if their income changed, he needed to provide an update. However, he had never been placed on fortnightly reporting for, carer payment, not parenting payment. As such, throughout this period, Darren hadn't been reporting his partner's income for the carer payment, had only been providing estimates for the family tax benefit. This went on for 2 years until a data match with the ATO showed that his partner's income hadn't been taken into account for carer payment. And so Centrelink went back and raised a $25,000 debt for the difference in what he was eligible for in carer payment after taking his partner's income into account. So it's quite a frustrating system that people could be providing their estimates for family tax benefit and updating them throughout the year, but that information doesn't carry over to their social security payment, to their job seeker, parenting, carer payment, age pension, disability pension, whichever one it is. Now, we also see issues as well where students get Centrelink debts as well for a number of reasons. There are Centrelink payments that are tailored and aimed towards people who are studying students. They're typically youth allowance, AB study, and Oz study. Each of those payments has study requirements, so people generally need to be studying for Most of them, it's typically you need to be a full-time student and completing at least 75% of a full-time study load, so three-quarters of whatever full-time is. Um, it could depend on the course of the education provider, whether it's based on credit points or the number of hours you're attending class. You also need to typically be making reasonable progress throughout your studies. And with some payments, for example, Study, there's what they call limits of assistance. And what that is it's a limit to the number of courses you can study and receive the payment. So, for example, you can only receive a student payment for one course at each level of study within a 10-year period. So, for example, you can only receive it for one bachelor's degree for Study. And then in another 10 years, you could perhaps receive it again for another bachelor's degree for Study. Not every course of study is what we call an approved course for a student payment as well. For example, if you're studying a master's or a PhD, you might not be eligible for Study because the course isn't approved by Centrelink for a student payment. Centrelink can also data match with education providers. I've seen this happen pretty often. For example, where someone has reduced down to part-time study, or perhaps they've stopped studying, Centrelink have data matched with their high school, TAFE, uni, and obtained their attendance records or their enrollment records, seen that the person's not engaged in full-time study and raised as a debt. So some of the situations where a debt can come about because someone's on a student payment could include, again, like I've mentioned, if they've withdrawn from study and they haven't told Centrelink, if they've reduced to part-time study, so if they've dropped under that 75% of a full-time study load and they haven't told Centrelink, or it could even be if they've changed the course they were studying and they haven't told Centrelink. For example, if they were getting youth allowance for studying a bachelor's in engineering, for example, and they decide to instead go to TAFE and enroll in a diploma of community services, but they start doing that diploma of community services part-time and they haven't told Centrelink, there could be a debt that could be raised. So with student issues and payments, again, it's very important to report any changes to Centrelink within 14 days, because if someone does withdraw, reduce their study, change their course, whatever reason it could be, these are all reasons that there could be a debt. As well, there's all of those other reasons that a debt could come about as well, that include things like your income, your assets, whether or not you're in a relationship, whether or not there's kids that are in your care. Now, we've got another case study here. So, Joseph was a 17-year-old who'd been referred to us by another community legal centre. He had a 7,500 Centrelink debt for youth allowance he'd been overpaid after he withdrew from his studies. Such a shame, a 17-year-old starting out their adult life with a 7,500 Centrelink debt. After Joseph was referred to us, we interviewed him about his circumstances. We also lodged a Freedom of Information request to Centrelink to try and get full information about the debt and to try and see what had happened. While we were reviewing those documents, we saw that the debt had come about because there'd been a data match with the high school that he'd been going to, where Centrelink became aware that he'd stopped attending. And so they raised a debt for the youth allowance he continued to receive after he stopped going to school. When we interviewed Joseph, we actually found out a lot more about his life. This is a 17-year-old that had been in and out of foster care from a really young age, had a debilitating illness, had witnessed and experienced family and domestic violence, had gone through periods of homelessness as well, just before he'd been granted youth allowance. And then as well, when he dropped out of study, he went through another period of homelessness as well after a relationship broke down with the family friends who were letting him stay at their place. He started couch surfing as a result, and it took months before he found stable accommodation. Unfortunately, for this period of time where Joseph was homeless, he was getting youth allowance, and Centrelink were under the belief that he'd still been enrolled in high school and was still studying. And after that data match with the school, they raised a debt for all of the youth allowance he received from when he stopped studying up until when they'd conducted the data match and realized he'd been overpaid. Um, Fortunately, we were able to assist Joseph. We helped get letters of support from organisations he'd been in touch with, prepared a statement setting out his circumstances and everything that had happened over this period of time, and lodged an appeal to a review officer asking for his debt to be waived on special circumstances. Fortunately, they agreed, and his entire 7.5 grand debt was waived in full, and he was refunded any payments he'd made towards the debt. So this one was a fantastic outcome, but it also serves as an example of, some of the pitfalls that can happen. This is someone going through some really difficult stuff at such a young age as well, and because they haven't notified Centrelink that they weren't studying, they've managed to incur a huge debt, and such a large debt as well for someone who's only 17. All right, we've got another brief stop for questions, and then we'll go into talking about the review and appeal process and going through some more detail there.
Okay. Just play some catch up here. Uh, all right. So I think, in some respects, we're getting quite a number of statements and people sort of expressing their uh, disappointment with the rules and the regulations of Centrelink and how people are unable to navigate that. And one of those statements is these rules are complicated, particularly for people with disability. Who can help, or is there an easy read guide? Um, and
I'm not aware of any easy read guides off the top of my head. Because I don't think Services Australia have made any easy read resources around any of this yet. Are you
They
aware
have
of any,
some
Thea?
simplified videos regarding
Mm,
some specific content, but yeah, no, there
mm.
does need to be more done.
Yeah, but I agree. It's an incredibly complicated. There was a review recently from the Administrative Review Council on the Administrative Review Tribunal process. And in the report that they wrote, they said that Social Security law is technically complex. And I couldn't agree more. Like, it is so complicated. There are so many different little bits and pieces that go into decisions. And so many little pitfalls where, someone could come afoul of one of the requirements and it could lead to a debt. So it can be very complicated.
Julius, can I just ask a question very quickly? Is that possible?
Uh, yeah, just go ahead, Susan, but actually we're just trying to run it through the chat because
Oh,
we can't.
sorry.
So one of the questions we do have, Julius, is how to challenge an odd study debt due to studying with multiple education providers for higher education when Centrelink doesn't consider it full-time study. But even if they weren't
Mm,
eligible for Oz study, would she be eligible for job seeker during that period too?
yeah. So what you've mentioned there, it's something that sometimes we might include in a special circumstances appeal, and that's trying to say that the person, sorry, might have been notionally entitled to another payment. So, for example, if they'd weren't studying, but they might have been eligible for job seeker instead. With that example I gave before with Joseph and his debt, one thing we actually included in our submissions is that, the debt was for youth allowance student. It's possible that he might have been eligible for youth allowance job seeker instead. And very likely that given the frequent periods of homelessness he had throughout that period, might have been exempt from his mutual obligation requirements. Whether or not the other periods of study or the different education provider could count, it'd depend on um, whether it's an approved course as well.
Okay. I think um, I'm just going to get on to what Susan was talking about, and I think this has come up with a few other areas, which was, doesn't the government have a legal obligation, like the banks, to ensure participants understand this information? I'm not sure that we can answer that as such.
Yeah, because I guess the thing is there's no sort of you know, duty of care sort of system that's set up where, they have an obligation to put people on the right payment, for example, even. Um, I think it's a problem with our social security system and how it's set up, where there might be different systems. For example, I've heard with New Zealand's social security system, but there are some positive obligations set up within how it works around making sure someone's on the appropriate payment. Um, and I think that's the problem again, is it's a really complicated and messy system with so many different moving parts, and it's decades upon decades of legislative changes and all sorts of bits and things added to it that have made it just such this enormous system. And as well, it's such a huge number of people that receive payments under it.
Yes. Okay. Um, so how do you get an adjustable taxable income? For example, a couple's last year's income was too high to receive benefits from Centrelink. They're both not working whilst their daughter is having a cancer treatment and they also have a newborn. Oh, sorry, this is becoming very specific, but I think it's like when everything just sort of turns around.
Yeah, with the adjusted taxable income, what that is it's actually a specific term that Centrelink use for your income for family tax benefit. So it's similar to taxable income for example, tax, but there are some differences. Um, if you look on Centrelink's website and look at or search on there adjusted taxable income, there's a bit that shows what adjusted taxable income is and goes through some of the different bits and pieces that go towards um, that definition.
Okay. Um, so we had a question about FTB and whether it could be claimed retrospectively after the financial year is over so as to avoid a debt. And what is the time limit on back pay for family tax benefit? And so I suggested that there was 12 months, but there may be exceptions. And the exception, would an exception be communication issues such as deafness, cannot speak English, unable to link to the ATO, things like that?
Hmm. I'd have to look back at it, to be honest. Um, the thing is with family assistance law and the family assistance guide, which is Centrelink's like policy manual, which sets up how it works. It's it's quite complicated. So to be honest, I'd have to look back at that to double check what the exceptions are and what some of the criteria for the exceptions are. Off the top of my head, I don't know whether that would fit.
Okay.
But typically it's, you've got 12 months after the end of financial year to do a past period claim for FTB as a lump sum.
All right. And can you get a refund on non-lodger debt once tax return lodged?
Yeah, if you've paid some of the money towards the non-lodger debt, and then you lodge your tax return and Centrelink find out you're actually eligible for all of it, you should normally receive back what you've repaid. All
Okay.
right, I might move on now, if that's all right, Thea.
Yes.
All right, now we'll get into some more of the nitty-gritty, and we'll be talking about debt recovery and the appeals process a little bit. Now, like I mentioned at the start, one of the things we tend to stress with clients as well, if they find out they have a debt, recommend they enter into a repayment plan and try and negotiate an affordable repayment plan, something that, isn't going to put too much strain on someone. Centrelink can also pause debt repayments for a period of time. I've seen situations where they've been willing to pause a repayment for 3 months, for example, to give someone some breathing space and be able to figure their circumstances out. Um, as well, something that I didn't mention earlier that I should have is that on MyGov, there is an option to enter into a repayment plan there for a debt. I've seen a client situation recently where they were able to get on a $10 a repayment, $10 a fortnight repayment plan through MyGov. But I've also seen situations where the minimum was much, much higher. I'd recommend having a look to see what you are able to enter through MyGov, but if it's not affordable, calling up the debt recovery line and if possible, again, speaking to a financial counselor, trying to come up with a budget to show that either it's affordable or you can't make any repayments to ask for it to be paused, would be the way to go. Because if you don't, Centrelink can apply the 15% automatic deduction as well. You know, they can get a garnishee order, so they can garnish your wages. There's even situations where I've seen Centrelink commence legal proceedings, so where they've tried to take a matter to court to force the sale of someone's house or investment property so that they could repay a Centrelink debt. They can also apply interest if you're not on a repayment plan. Something else that can happen, quite rare, they could apply for a departure prohibition order, stop you from leaving the country unless you're on a repayment plan. The last one I haven't seen very often, but it's something that does happen every now and then. And as well, sometimes people can be referred, for prosecution. Again, it's not something that's too common, but it is something that does happen. Sometimes people can be referred for criminal prosecution where they have a Centrelink debt. Now, people can appeal Centrelink debts. You can ask for a review or challenge a debt. And there's a couple of different ways to go about it. Debts can be written off. You can challenge the existence of a debt, whether it should exist, the circumstances that gave rise to the debt, or the amount of a debt, whether it's been calculated correctly. As well, there's waiver rules where the debt could be extinguished or waived. There's two main ones we touch on, which is sole administrative error and special circumstances. And so I'll go through some of these now. However, there can be a risk appealing Centrelink debts. Debts can increase when you appeal them. So for example, with that situation we had right at the start where I showed you the debt letter where someone had a debt for the disability pension because Centrelink thought they were a member of a couple for 15 years, you know, from 2004 to 2019. If during the review, Centrelink find out they'd actually been in a relationship earlier, back to, let's say, 1995, Centrelink could increase the debt and go back even further. I have seen many situations where debts have increased on appeal. So we generally recommend that people try and get advice and look into it a bit more and be aware of the risks before they jump in and appeal or challenge a Centrelink debt, because it can increase. It depends on a number of things like the reason for the debt and the circumstances that give rise to the debt. But it can happen and does happen. Now, the first of these grounds for challenging a debt I'll touch on is writing a debt off. This doesn't permanently stop or get rid of a debt. Instead, it's sort of a temporary pause or suspension of the debt. The debt can still revive in some circumstances here. So, for example, Centrelink debts can be written off if the debtor, the person with the debt, has no capacity to repay it. The debt could be written off for a period of time. For example, it could be 3 months, 6 months, a year, depends on what the decision maker decides. Other situations can include if, you know, it's not cost effective to take action to recover the debt, if all reasonable efforts have been made to try and locate the person who has the debt, but you can't find them, if their whereabouts are unknown, if they've sort of disappeared, I suppose. Or if you enter into bankruptcy. While a person's in a period of bankruptcy, the debt's written off, so it shouldn't be recovered during the bankruptcy. And the debt should normally be written off after you emerge from bankruptcy. It should be considered irrecoverable unless Centrelink suspect the debt was incurred by fraud. Now, part of a problem here as well is that this is a civil standard. It doesn't actually require a criminal conviction. You know, you don't need to have been referred to the CDPP and been prosecuted for a debt to actually re-emerge if Centrelink suspect or make a finding that they think the debt was incurred by fraud. So it's something to look out for, where there is bankruptcy, whether or not there's any suspicion of fraud. That in itself, though, is a decision that can be reviewed. Is this fraud finding? But it could carry risks. For example, if Centrelink, if it's very obvious that the person did incur the debt by fraud, they could be referred for prosecution. So it could be risky. Um, it really does largely depend on the person's circumstances. Now, one of the other ways that we've seen people challenge debts and that we've done as well is by challenging the existence of a debt. So whether or not the circumstances that gave rise to the debt are correct. So we've got a couple of examples here tied back to some of the common reasons we've had for debts throughout today's presentation. So for example, if a child has been out of someone's care, by proving the child is actually still in the person's care and was in their care for that period of time. If Centrelink alleged someone's a member of a couple, but they're in a relationship, you could go about challenging the debt by trying to prove they're not a member of a couple, or that Section 24 discretion that perhaps they should be treated as if they're not in a member of a couple relationship. As well, when arguing whether or not someone is or isn't in a relationship, family and domestic violence is a factor that's relevant that can be considered. Typically, though, it is helpful to try and provide evidence of the family and domestic violence. Unfortunately, with the nature of how it often occurs, there might not be anything. There might not be AVOs or police reports if it's never been reported. But if the person's been engaged with, for example, support services, letters of support and statements setting out their circumstances, might be able to help. As well, some of the other issues could be, if there's a debt for studying, by proving the person still met their study requirements during the debt period. All right, but now we'll get on to the waiver rules. So the first of these rules is called sole administrative error. Now, waiver means that the debt is extinguished or wiped, essentially as if it didn't exist anymore. Under the administrative error waiver rules under the Social Security Act, the Secretary must waive a debt if the overpayment was caused solely by an error of the Commonwealth and if the person received the payments from that error in good faith. So this is a multi-limbed test. You've got to meet each requirement under this for a debt to be waived due to a sole administrative error. So first of all, the person needs to have been overpaid because of an error, and this error needs to be solely on the Commonwealth's behalf, so the person can't have contributed to that error, and then they need to have received the payments from that error in good faith. Now, there have been a number of different tribunal decisions that have looked at this interpretation of what does good faith actually mean. Generally, it's when the person didn't realize or suspect that they weren't entitled to the payment, but they thought they were entitled to receive it and that it was okay to keep receiving it. Where they did know that they weren't entitled to the payment, even if they've asked for it to be cancelled, there have been cases where a debt hasn't been able to be waived due to an administrative error because they've lacked that good faith. They knew they weren't entitled to the payment, asked for it to be cancelled, kept receiving it. Even though it wasn't their fault, they still haven't met this good faith aspect and weren't able to get the debt waived. Now, as well, there's an additional requirement if the debt's family tax benefit or childcare subsidy for one of these family assistance payments, where you also need to show that repaying the debt would put you into severe financial hardship. So what that means is if you meet part A, B, and C, you've been overpaid because of an error, it's solely on Centrelink, and you've received a payment in good faith, but you can afford to repay the debt, repaying it won't put you into severe financial hardship, the debt can't be waived for family tax benefit. So this is a particular problem with administrative error as well, with the letters Centrelink send out to people. So often that information on the back of Centrelink letters that says, you need to tell us within 14 days about all these different criteria, income, assets, relationships, etc. What that does is that puts the person back on notice about their obligations to Centrelink. And if you don't follow through with that and correct information that might be incorrect in that letter, it ceases to be solely Centrelink's error. And so we've got another case study here. George has a $3,800 debt for family tax A and B. His daughter left his care on the 4th of July and didn't come back into his care until the 5th of December of 2023. George's daughter left his care to go and live with his ex-partner in northern New South Wales. George had recently started cancer treatments and he wanted his daughter to have somewhere stable to stay while he's going through that. 12 days after his daughter left, he uploaded a letter to his Centrelink online account saying that his daughter had left his care and asking for his family tax benefit payments to be cancelled. He didn't really pay any attention to his payments after that, and he didn't notice that he was still getting family tax benefit. And then in September, he saw on his bank statements that he was still getting family assistance payments for his daughter. He called Centrelink again and again asked for him to cancel his family tax benefit payments. Unfortunately, it took until the 1st of December before his FTB was finally cancelled. Sorry, and unfortunately, on the 1st of December, his ex-partner applied for family tax benefit. Didn't re-enter his care. Centrelink didn't actually cancel George's family tax benefit until the 6th of December. And they'd only done this because his ex-partner had applied for family tax benefit. Now, George is getting job seeker payment. He's on rent assistance. He's still going for his cancer treatment. He's exempt from his mutual obligation requirements. He doesn't have any savings left, and his only asset is a 20-year-old car. In these circumstances where George has asked for the family tax benefit to be cancelled, do you think his debt could be waived under administrative error? And if you want to, please just feel free to put a yes or a no or a maybe in the chat. All right, there's a mix. Started with a wave of yeses, a couple of no's in the middle, then a wave of yeses at the end. But here I'm going to say no. Now, the problem going back to the administrative error requirements, it's this good faith aspect where a person kind of realized or suspected they weren't entitled to. Now, because George asked Centrelink to cancel his family tax benefit because his daughter had left his care, that's going to be interpreted as George not having received the payment in good faith. So even though he's done the right thing and asked for his payment to be cancelled, he's continued to receive it. And because he knew he wasn't eligible, that it should have been stopped, even though he didn't realize he was still receiving the payment, his debt's not going to be able to be waived under administrative error. So regardless of how the error has come about, again, you've got to meet each of those limbs of the waiver rule for it to be waived under administrative error. Now, this brings us, though, onto special circumstances. Now, special circumstances is another way that Centrelink debts can be waived. Special circumstances is discretionary, though. So it is up to the decision maker. Now, there are, again, a number of criteria you need to meet. And right back at the very start, I mentioned that there were some recent changes around special circumstances. So I might just briefly go through and explain how it works and then what the changes were. So the secretary may waive a debt, so it's discretionary. They might be able to, may waive it, depends on the decision maker, if one of the following applies. The debt didn't result from the debtor, person with the debt, or another person knowingly making a false statement or failing to comply. Now, here's where these additional bits have come in. It used to be that it stopped there. The debt didn't result from the debtor or another person knowingly making a false statement, and there were special circumstances other than financial hardship, and it was more appropriate to waive. Now what's happened is with a bill that passed towards the end of last year, I think it was in November, they've introduced parts 2, 3, and 4 here. So now, if the debt did come about from the person with the debt or another person knowingly making a false statement or representation, the debt can be waived if it was justified in the circumstances and they meet the other criteria. As well, if the debt did come about from another person knowingly making a false statement, but the person didn't know, so the person who has the debt didn't know about the false statement or failure to comply, then it's now possible that the debt could be waived. Lastly, again, if it did come about from another person knowingly making the false statement, and then the person with the debt knew about this false statement, but it was justified in the circumstances, then the debt can also be waived. So these are these three new, um, I guess, exceptions to this knowingly rule that have been brought in. So it used to be that if the person with the debt or another person had knowingly made a false statement or failed to comply, that the debt couldn't be waived. So that was particularly problematic in circumstances of family and domestic violence, for example, where the perpetrator had knowingly made false statements, the debt couldn't be waived. Now, if the person with the debt doesn't know about the false statements, or if it was justified in the circumstances, let's say, for example, it could be in the situation of financial control and duress. Now it's possible that a debt might be able to be waived in these grounds under special circumstances. But they still need to meet the other criteria, which are that they have special circumstances more than financial hardship, and that it's appropriate to waive the debt than to write it off. Essentially, that the circumstances justify waiver of the debt. So again, it's a multi-limb test. They need to meet those criteria. It is discretionary, so it's up to the decision maker. There are these new exceptions for the knowingly side of things that have come in. We haven't really seen any, I haven't at least seen any cases yet that have tested what justified in the circumstances means. So it's a bit of an evolving landscape around this now. It'll be interesting to see how that develops. But it's a step in the right direction, I think. But again, it needs to be more than just financial hardship alone. Financial hardship's relevant, but it can't be the only factor. And generally, it's better if special circumstances can be tied to the debt or the debt period. It adds some strength. Also, people will need to provide evidence to try and support a special circumstances appeal. A person's statement is helpful, but if there is independent evidence that helps show what they've been through, then it adds strength to their appeal as well. And so I've just got a couple of examples I'm going to run through. I am aware that we're starting to get short on time. So the first one, Sarah has a 7,000 debt due to under declaring her income for job seeker. She tried her best to estimate what would be, but didn't always get it right. It happened over a period of time, unfortunately, that this debt slowly accumulated. She's working part-time, earns $800 a week. Finances are really difficult. She's renting anywhere in Sydney that's nowhere near enough to be able to get by and pay for the cost of living. Rent's $450 a week. She's got rego on bills coming up. She owes money on Afterpay and Zip Pay and her credit card. Do you think in these circumstances, Sarah's debt could be waived under special circs? All right. So I think the no's have it. Yeah, unfortunately, in this one, Sarah's circumstances at the moment, they're just financial hardship. That's not to diminish what she's going through, but one of the requirements for waiver is that it needs to be more than financial hardship alone. But depending on what Sarah's other circumstances are, there might be something to it perhaps. It would really depend. But just based on this information alone, I'd say it's not enough. Now, what about George with our example earlier where he'd asked for his FTB to be cancelled? He's going through cancer treatment, really difficult financial circumstances as well. How about here? A wave of yeses. Yeah, I think George has got a good chance giving it a shot. As well, something that could be relevant is this administrative error. So George telling Centrelink about his child leaving his care and them not acting on it, that's relevant and that could go towards special circumstances as well. So special circumstances, it's discretionary and special circumstances itself, those two words aren't expressly defined under the Social Security Act. So they're very broad in what they can take into account. Um, so I think it's entirely possible George's could be. Now, we've got another one here. Fatima has a $23,000 debt. It's due to undeclared income from 2018 to 2020. Um, she'd been in a relationship with her husband after she arrived in Australia in 2010, began getting parenting payment in 2015 after their first child. They've got 3 kids. She's the full-time carer, and her youngest has an intellectual disability. Fatima was in a family and domestic violence relationship. He wouldn't tell her how much he earned. She left in 2020, got an AVO, and has been engaged with domestic violence services. Now, I think Fatima's got a chance of getting it waived under special circumstances here as well. I think there are bits and pieces of evidence that could be helpful to get to here. So, for example, it could be copies of the ADVO and support letters from the domestic violence services, as well as documents to show if she's been able to get support from organisations like Start Safely, for example, or even victim services. All those sort of other documents while she's trying to rebuild her life, they could be helpful for the debt appeal side of things too here under special circumstances. There is a bit of a question on the knowingly side of things, whether, her ex-husband has knowingly misled Centrelink. It's hard to ascertain though, because, she's just reporting whatever he tells her to report. But regardless, I think, there is some merit here in Fatima's case. And now we've got a situation here with Liam where he's receiving the disability support pension. He started working in 2015. He has a traumatic brain injury, and his mum is his carer and nominee and payment nominee for Centrelink. So her payments get paid into his payments get paid into her account. He asked her to stop his pension while he was working, and she never did. She didn't contact Centrelink and do it. She kept receiving his payments. It used to be that under the old knowingly rules, if Liam's mum had knowingly misled Centrelink, had deliberately not told them that Liam's working to continue receiving his payments, that there would have been a problem with the knowingly question here. But I think there's a chance here for Liam as well, particularly where another person has knowingly misled Centrelink, but the debtor, the person with the debt, doesn't know. Now, unfortunately, in all of these situations, with Liam and Fatima here in particular, they're the people who have received the Centrelink payment, and the debt's always raised against them, even though, another person may have done the misleading Centrelink things. Unfortunately, with the way the law is set up at the moment, the debt can't actually be assigned to that other person. So it can't be assigned to Fatima's ex-husband or Liam's mum in these cases. But fortunately, in these two, I think there's some merit to trying to challenge their debts. Now, with the appeals process, it's generally pretty simple to appeal a debt to a review officer at Centrelink. There is a form that you can complete to ask for an explanation or a review, or people can ask for a review over the phone. But again, I need to stress there's a risk the debts can increase. In all of these examples that we've given, if the debt had only been for Liam, let's say, for example, from 2016 to 2018, there's a risk that his debt goes back an additional year back to 2015. So, we always caution people to get further advice or look into the debts more before appealing, because again, things can get worse, debts can increase. Now, just a bit of an overview. There's no time limit, fortunately, on appealing Centrelink debts to a review officer or to the first tier of the Administrative Review Tribunal. Once a decision's been made at that first tier, though, there is a 28-day time limit to the second level, and then a 28-day time limit from the second level to the federal court as well. Here's just a brief overview of the process. So there's the original decision, first steps for review officer, then first tier of the tribunal, second tier, and then federal court. Federal court, though, is a costs jurisdiction, so you can be ordered to pay Centrelink's legal fees. As well, you're much more limited in how you can appeal there. It's not a merits review, so they don't stand in the shoes of the decision maker and decide whether or not the decision was correct. Instead, they look at whether their decision was legally correct, whether there were any errors in law. Now, again, there is a form you can fill in to request an explanation or review, this SS351 form that's available on Centrelink's website. You can request an explanation sometimes instead of the formal review, where someone from Centrelink should call you back and explain more about the debt. The merits review process, you can also ask for a formal review by an authorized review officer by completing the form. If you upload it, though, I generally recommend calling up afterwards to confirm that the form has been received and to ask that the review be processed, because you don't want it sitting there for perhaps weeks and it gets missed. But again, there can be risks appealing Centrelink debt, so we generally encourage people to get advice and look further into it. As well, if you're appealing a debt based on special circumstances, for example, providing supporting evidence with the appeal is always helpful too. Now, some of the ways you can find out more information about Centrelink debts, if there is one and you want to try and know a bit more, you can do a Freedom of Information request. That can help establish what's happened throughout the time period the debt's for, what someone said to Centrelink. You can get copies of recordings from phone calls with Centrelink. I think they only go back to 2017 though. It can help with assessing whether there's a risk of the debt getting worse on appeal as well as things like how much income someone's reported each fortnight. We've got a couple of examples here of just some of the documents you can request, as well as an example of an FOI request that someone's done. This is one of the documents I mentioned back when I was talking about RoboDebt as well, this 8x debt schedule. So this was helpful with showing how much income someone had received each fortnight, how much they'd reported, and then that column with how much their apportioned income was. If it was a RoboDebt, it'd typically be the same thing each fortnight throughout the financial year there. Now, be careful what you wish for, though, what you ask for with an FOI. If you're too broad, you might end up with a huge bundle of documents. I've seen some that have been in the hundreds or thousands of pages. All right. Now, Thea, we've got one last questions bit, but we've only got a couple of minutes left. Did you want to do maybe one or two and then we'll shoot through?
Yeah, I think we've answered the bulk of them as we've gone through. We've tried to give some relatively good links in the chat. We'll try to get back to you. I suppose there's just this one, which was, I was informed if you can prove financial or physical abuse in domestic violence, the person is not responsible for the debt. They won't be liable.
Yeah, that's not the case. If the person still received the payment, the debt's still in their name, but they might be able to challenge it, and they might be able to challenge it under those grounds of, if it's because of a couple that the relationship might not have existed, or they should have been treated as being single, or under special circumstances, perhaps. But
Okay.
unfortunately, the debt can't be assigned to the perpetrator.
Thank you. I don't think I can go through any more of these questions, but I do recognize that we didn't talk much about the fact that we are a community legal centre. We are telling you what to do about the Centrelink debts and how to avoid them for the most part, and what you can do to appeal them. But at the same time, we do recognize all of your frustrations with Centrelink and all of the issues and all of the unfairness and what we have to advocate for. And many people have said, who's going to, who will do something about this? And I think we have to do something about this. All of us have to do something about this. We need to speak up. We need to write letters. We need to support the advocates that are doing the work. We have a few more slides just on.
Yeah, and I might just mention on to that as well, Thea. Like I said after the break, our clients' stories, things we see on the ground when we're giving advice to clients, trying to help them through their circumstances. Sometimes we'll see quite unfair and unjust situations where it might be terrible, but there might be no merit in trying to challenge a decision. And we'll try and use that client's case study to feed up to Economic Justice Australia and push for law reform and policy changes. Unfortunately, I think with some of the recent DV changes, there's been some small wins. I think there's still room to go, but there's been progress, and I hope we keep making progress.
Okay.
All right, over to you, Thea.
For those who are still joining us, we just wanted to point out that if you're not aware, you can you or your organization can become a nominee for your client, and you can get their authority to do a number of different kinds of interactions with Centrelink. So please look that up. There are digital coaching services from Centrelink now. I'm not sure, we haven't used them ourselves. So, but it is a good opportunity to get your clients to get some help in order to access MyGov, etc. And you can book appointments with Centrelink. Many people are unaware that you can do that, and that's worth trying. Next slide. Thanks, Julius.
Sorry, my mouse died.
That's okay. Supporting your client with Centrelink, you can also use their interpreting and translation services. So it's really worth looking at those. Next slide. Our intake line is open on Monday and Wednesdays from 9:30 a.m. till 12:30 p.m. You can use our online form at any time, however, and that is a good way to get through. If you are referring a debt to us, please include the debt notice, the debt amount, the payment the debt is for, the debt period, the reason for the debt, and copies of any appeal decisions.
It makes my life a lot easier trying to advise on a debt when I know more about it.
And I've also attached a link on this page and in your slides, which will help you with a referral guide. We have a lot of online resources and fact sheets. Please look at our website. Next. And if you do follow us, we will try to inform you of upcoming sessions like these. We also will be promoting in the next few months a national advice line on social security for community workers, and we hope to be launching that later in May. And we hope that it will be very helpful, and this is the best way to stay in touch with us. So please do that. And don't forget to do our survey. We really need your support and feedback so we can keep doing these sessions and providing them for free. Thank you so much for joining us.
Absolutely great if you're able to, scan the QR code and complete the survey. It really helps us out. And thank you so much for sitting in and attending, everyone.
Yeah,
there's been some fantastic questions. It was really good.
And some fantastic answers as well. All right, from both our audience and yourself, Julius. Thank you.